All right, good morning. All right, just to catch up, we've got a long position for 3,697 units and a short position for 3,697 units, and a pretty good spread between them. Sitting around what 300 pips between them, trimmed it down, and have 8,800 units ready to go and ready to get in the game. What I'm going to do is go short here for 8,000 units. We're going to sell that right there. So now we have 8,000 units plus our 3,697 unit position, which totals us at 11,697 units, and we're unbalanced. So 30 pips above that would be 1.37950. So we're going to go up here to 37950, and we're going to do a buy stop. I'm going to actually change this to exactly 950 for 8,000 units and put a buy stop right there. So now we have a short position of 8,000 and a short position of 3,697 in play, a pending order of 8,000, and a long position of 3,697. So now what we do is we wait. We wait and see what happens. You know, sometimes the market just does you dirty. It just really does. And this is one of those moments. So we had this backstop up there. I didn't even think it would come into play. I really thought we would have the same move we're having right now. It just picked this up last night. Just grabbed it. And then sold right back off. I mean, look at that tail. It's like it knew where my stop was, grabbed it, and then sold off. Ah. Anyway, we're back to cooking over here on the position that could have been magic. Really would have been a great shot. And that's why you just protect your positions. You just don't know. This could have easily been an about face and a continuation on. Markets kind of do what markets want to do. So we're 31 pips in the money, looking for 40. All right, that's getting pressed down there pretty good. I think I'm going to go ahead and take that profit right there. So let's go ahead and take our profit right here. And we're going to trim this outside position by 2,000 units. So partially close him. All right, so that leaves us 1697 on the top. We still have that 8,000. That's kind of a stinger that it picked up. All right, so that gave us a profit there. It's still continuing on, but I think it was an all right trade. We have 1697 on the top, 8,000 on the top, and 3697. So we're unbalanced by 6,000 units. So somewhere down around here, we're going to put a sell stop for 6,000 units. Give us a backstop. Hopefully this thing rebounds a little bit. All right, starting to get a little bit of a pullback. So we're going to squeeze this thing to about, let's go 041. All right, we're up for another squeeze. Full transparency. This is 10 units less than it was a minute ago. I was playing around with trying to create a trailing sell stop order. And I thought if you put a limit order in with a trailing stop, it might work. It doesn't work. All right, we're going to squeeze this up 2 or 3 pips now because market is moving, just to keep that sliding along. So we're getting to squeeze this again. What I wish is that I could set this up so it just trailed the market at 20 pips. If anyone knows how to do that in TradingView, please put it in the comments, shoot me an email, because what I have to do right now is I just have to squeeze this. So every time it moves, you have to come in here, squeeze it, and modify it. I wish there was a way, and I know there is on other platforms, but not specifically on TradingView that I know of, where you can say, this is where I want it to go, offset the market by X amount of pips, 10 or 20 pips, and then it's a trailing stop order or a trailing sell stop. Instead of just a trailing stop, it's a trailing sell stop. How cool would that be to be able to modify that, set it 20 pips for wherever you want, and then you don't have to babysit the squeeze? I wish that was a thing. That would make me happy. Maybe there's like a way you can write a script, a Pine script or something. I don't know. You smart people out there, figure out how to do a trailing sell stop. That would be life changing. Another big squeeze. It hit 6.0, so I'm going to take this to 40. So we've had a pretty good squeeze on this guy. Moving it up. Man, I wish I could figure out how to turn that into a trailing squeeze. That'd be so cool. Well, and just like that, it's all over. Ain't nobody getting any more action today. So this is where I ended up closing. Going into the weekend, long 1,687 units. That was 1,697 units. It is now 87 because I tried to have a trailing stop on a position. I was trying to set up a limit order with the trailing stop that would trigger the stop order, and all it did is just close out units. So I did it twice with 5 units each time, and both times it immediately just closed out 5 units. We now have 9,687 units on both sides, fully hedged going into the weekend. All right, let's hop into the comment section and see if there's anything we can chat about today. This top comment's actually pretty good. One person wrote, "Why you don't double the position size for the opposite direction instead of only trimming all the way. In this way, you will exit the hedge situation much faster and then start all over again." And that is a very valid question and probably similar to what I did here. Maybe not exactly how you did. I didn't double it. What I just did is balance to capacity, and I saved these units on the side until I thought there was a good spot to go in. Went in. That did come into the money. Unfortunately, it did pick up the other side before we were able to pull off a clean trade. But so I don't always just balance the capacity. I like to wait until I get a pretty good chunk of the unit set on the sidelines, but that's just me. You can double that position as long as you have units available, and it's not going to max out your margin of availability, and you're not going to run it too close to the red line there. Then yeah, by all means, I think however you decide to use your units is totally cool with me. As far as the average true range indicator, I'm not familiar with it. I've been an RS guy since like 2005 or something like that, when online trading was just becoming a thing back in the day. We didn't have a lot of sophisticated indicators, and definitely not some of the new ones that are out, and was always um, comfortable with the RSI. I don't really use it a ton. It's more of like, how hot is the transmission if I was pulling a trailer? It doesn't really affect how I pull the trailer. It's just something I'm aware of. It gives me like a little bit of an indication that maybe I should slow down or speed up a little bit. But this RSI is not very indicative of the full trade. It's just an indicator. This is a pretty good comment right here. What I like about your videos is not so much the strategy, fair, thank you, but your attitude towards drawdown. It can be a healthy part of trading if it fits within the strategy. And I think that's very accurate. If you are hyper focused on drawdown and it scares you a bunch, I think you will struggle as a trader. I know there's times where I've been hyper focused with the drawdown, and then it becomes where all I do is increase my drawdown. I'm not loose. I'm not flowing with the market. Um, there is a cost of doing business. There is overhead. There is what they call it, like operating capital in the business world. There's operating capital, and if you're not putting operating capital into the business, what you are is an employee, and you work for an employer that's willing to put operating capital into a business. And that's fine. Not all of us are traders, not all of us are employers. Many of us are employees and don't want or can't handle that level of risk. So, if you can find a way to be comfortable with your drawdown and managing it in a very appropriate way that fits within your strategy, trading can be very fun. Or if not, it can super suck. Okay, one last comment. I actually think this is a great one. One person wrote, so I'm trading from the inside. I have two positions on the inside and two on the outside, fully hedged. So pretty similar to what we got going on right here. Two positions on the long side and two positions on the short side. We've got the outside hedge and the inside hedge. This is probably pretty applicable to where we're at right now. And my short position goes into profit. My outside short position is the furthest away. Would I still trim that one or do the outside leg on the long side? Oh, this is a great question. Great question. So let's say this position right here came into the money. And this is probably already answered in the video, but I just want to revisit it. And it comes down and it's 40 pips in the money. If you take this position and trim this position, you wouldn't be able to actually decrease the units because you would have to go back in with 9,687 units. In order to decrease your hedge and get units back to trade, you have to trim the outside opposite side. So that would be this position, the 1,687 unit position. That's why this position got trimmed 2,000 units. So that would be the outside opposite. Now, if you really wanted to work on this position here, you could do a combination of the both. Maybe instead of trading 2,000 units here, you could trade, say, 1,000 units off this one and 1,000 units off that one. It would take a little bit more math, a little bit more dialed in, if you will, and that's how you could trim both sides of your hedge. I generally just trim the outside opposite position.